Liu Zhou sat in his office, scrolling through his Telegram messages. His group, MyTrade, had been buzzing for weeks about NextFundAI, a new Ethereum-based token that had seemingly come out of nowhere. Zhou had seen countless projects like this pop up, and he prided himself on spotting which was worth backing and which were ripe for, influencing. With its clean website, elaborate roadmap, and promising AI-powered platform, NextFundAI looked like the real deal. To him, this was another opportunity to use his trading algorithms and bots to maximize profits. From the start, Zhou noticed the enthusiasm in the NextFundAI communities on Telegram and Discord. Developers, whom he assumed were behind the project, were actively engaging with members, answering questions and even hinting at groundbreaking updates. He had even seen some reputable names in the crypto space discussing it. It all looked like a guaranteed win. What Liu didn't know was that this token was a trap. Behind every trade, every buy and every insider tip was the FBI, watching his every move. What Liu thought was his next big hit turned out to be a carefully laid web, and he was caught right in the center of it. Liu Zhou, also known as David Zhou or DZ, is a Chinese-Canadian entrepreneur who founded MyTrade in 2021. Registered in the British Virgin Islands, MyTrade presented itself as a financial service firm specializing in cryptocurrency market making. The company offered a tool called MyTradeMM through its website mm.mytrade.org, which was designed to enhance liquidity and trading volumes for various cryptocurrencies. MyTrade's MM services included volume support, where automated bots artificially executed trades to inflate specific tokens trading activity. This practice, known as wash trading, misled investors by creating the illusion of high demand and liquidity. Clients compensated MyTrade for these services through cryptocurrency wallets managed by the firm, including one with an address ending in 7AAFC, known as the MyTrade wallet. Zhou collaborated with associates to promote MyTrade services. One co-conspirator, based in China, assisted in marketing MyTradeMM, while another, residing in Canada, was affiliated with Ale Bank, a cryptocurrency exchange operating in multiple countries, including the United States and Canada. Confident that he had landed on a project he could manipulate, Zhou went all in. MyTrade, his firm, began using trading bots to buy and sell NextFundAI, pushing up the volume to make it look like the token was skyrocketing. He could feel the excitement build in the community, and as the numbers climbed, so did his confidence. He had seen it before: the rush, the buzz, and the eventual dump. All he had to do was sit back, push the volume up, and wait for the right time to cash out. As NextFundAI continued to gain traction, Zhou and his bots were doing their work, running trades that inflated the token's trading volume. More investors came in, unaware of the smoke and mirrors behind it all. Zhou watched the charts and smiled. The game was playing out exactly as he had planned. At its core, NextFundAI was branded as an AI-powered cryptocurrency combining two of the hottest fields in tech, AI and blockchain. This thematic choice wasn't random. The FBI knew that anything involving artificial intelligence would attract attention from both investors and manipulators. The white paper was filled with buzzwords like decentralized AI governance and algorithmic stability. Fraudsters saw this as an opportunity, knowing that buzzwords-heavy projects were easier to hype up and inflate for profit. NextFundAI's roadmap was carefully constructed to look exciting but feasible, a rare quality in the crypto world. It promised gradual but compelling advancements, from token burns to reduced supply and increased scarcity, to ambitious AI integrations that seemed innovative without overreaching. The FBI included realistic timelines, future milestones, and well-thought-out phases that mimicked the structure of successful blockchain projects. This strategy pulled in not only genuine investors, but also fraudsters, who saw the potential for market manipulation as the project gained traction. The tokenomics of NextFundAI were designed to appear especially attractive to those looking for hidden gems with the potential for huge returns. It featured a limited supply of tokens, frequent burns, which means reducing the number of tokens in circulation to inflate value, and attractive stacking rewards for those who held onto their tokens. These elements created an air of exclusivity and scarcity, fueling FOMO in both regular investors and fraudsters who wanted to pump up the prices. Over time, Zhou started noticing some odd details. The NextFundAI team seemed exceptionally organized. Updates were released with almost military precision. Even when MyTrade's bots attempted to manipulate trades, there was no obvious impact on the token stability. It was as though the token itself was watching him. His pulse quickened, a rare feeling for someone as calculated as he was. Dismissing it as paranoia, he pushed on, convinced that it was all part of the inevitable crypto frenzy. Then one afternoon, Zhou's world imploded. He was at his desk, reviewing day's trades, when his phone buzzed with a notification. The Department of Justice had announced charges against 18 individuals and entities for crypto manipulation. His stomach dropped as he read the headline. Names and entities flashed on the screen. His name, his firm MyTrade, listed right there, plain as day. The realization hit like a train. NextFundAI wasn't just another project, it was a honeypot, a meticulously designed trap set up by the FBI. Every trade he had made, every manipulation tactic he had employed, every wallet he had used, all of it had been tracked and cataloged as evidence. Zhou's trial came swiftly. With overwhelming evidence from the data NextFundAI had gathered on his trading patterns, his use of trading bots, and his coordinated pump and dump activities, there was little he could argue. In a last-ditch effort, Zhou entered a plea deal, agreeing to a reduced sentence. Operation Token Mirrors, executed by the FBI, led to the indictment of 18 individuals and entities involved in cryptocurrency market manipulation. It also resulted in the seizure of over $25 million in cryptocurrency assets and highlighted the growing focus of law enforcement on fraudulent activities within the digital asset space.